All right, what's up, y'all? Welcome to another episode of Bag Language. This is episode 2. So we had a pretty heavy earnings week in the stock market. So we had Microsoft report, Google report, or Alphabet, and Visa report, right? So I'm gonna just go over, the companies that I own. Microsoft beat top and bottom line, Visa, Google. If you don't know what top and bottom line mean, that means the top line is revenue, the bottom line is EPS, earnings per share, right? So all these companies did amazing, right? So Visa, it was expected to beat. Visa pretty much always beat their earnings or whatever, because everybody got, a Visa card in their wallet. We swiping that shit all the time. So it wasn't no surprise for them. But Google and Microsoft, people had their reservations because of the high interest rate environment, just what's going on with the economy and things like that. So this is my reason for making this video, right? If you don't have a profitable, lucrative business that you funneling your money into, with aspirations that it's going to be, one of the greats, later on in the future. Like if you have money sitting around, or you have money that jacking off, and you don't know where to put your money into to make it grow, Microsoft, Google, Visa, Apple, you got plenty of companies out here that's doing their thing, that you consume from and that you use on the daily. So why not put your money in these safe havens that are going to continue to outperform in the future? Now, a lot of people put their money in savings account, right? And those savings accounts yield probably from 0.25% interest to, let's say, 4.15%, that Apple and Goldman Sachs coming out with now, right? But if you look at the returns from a company like Apple, they return 300% on your money over the past 5 years. Microsoft probably 200 some percent. Google 100 and some percent. Not Apple, but what was I about to say? Visa, close to those percentage ranges. So look, if you want to beat, that 0.25% to 4% interest range, it's easy to do. All you gotta do is invest in good companies. It's not really that hard. Like if you don't have an idea, for a company that you building up, it's plenty other companies out here to get money with, and if you don't understand percentages, like I said in my last video, a 300% in 5 years, that would turn 10,000 into 40,000, right? Not to mention that the dividends, that these companies is paying, every couple months. So look, investing is powerful. Like I wish I would have known this when I was, coming out of high school. I would be a deca millionaire right now. But a lot of people don't pay attention to this stuff. And if they do pay attention to it, they just simply don't execute. Like it takes discipline to, put money away and, buy shares of these companies, especially when the market is going down. Like that's hard to do. It feel like you just, throwing your money away in the fire pit, but then, years down the line, you see the results. So one more thing. So let's talk about inflation, right? So we seen inflation get up to like 9.1%, I think, at its highest. Now it's at like 5%, right? So not only do you want to beat the interest rate that the savings account is offering you, you want to beat the inflation rate, right? So Investing in all the companies that I mentioned before would have allowed you to beat inflation at its peak when it was at 9.1%, because 300% over 5 years, over a 5-year period, you know what I'm saying, that's way more than 9% a year. Even if it was 100% a year, and not 100% a year, but 100% over a 5-year period, that's still beating the rate of inflation. So if you don't know what inflation is the increase of goods and services year over year. So when inflation was at 9%, in totality, you know what I'm saying, cumulative, you paying a 9% increase for things like, you know, grocery shopping, gas, clothing, internet service, whatever. All together, once they total it up, it equals out to 9%. So you want to beat that, because why would you work, make money, right? And you making money from your job, but the price of everything is going up substantially higher than what you making, you know what I'm saying? So it's like you working for dead money, you know what I'm saying? You want to put your money in vehicles that's going to beat the rate of inflation, right? I heard a good quote from Ian Dunlap, man, the master investor, and he said this, and this is simple, but it's so true. Every dollar that you spend could either make somebody else rich or make you rich. So if you take on that mentality, you know what I'm saying, when you getting your money and you trying to decide what to do with it, you know, you'll do some good things with it. Another thing I forgot to mention, so inflation is not usually this high. You know, normally it runs from 2 to 4%, you know, year to year. So as long as you beating 2 to 4%, you know, with certain investments, you'll be good. But that's it for episode 2. I'm still trying to get used to this camera or whatever, so if I seem a little, you know, nervous or whatever, yeah, I'm nervous. And I'm speaking into a camera like it's the weirdest thing in the world. So, look, the people that subscribe to me, man, I thank y'all. I hope, you know, new viewers that watch this, you know, this video, you know, follow the trend and subscribe to me. I really want to go live with y'all, you know what I'm saying, so I can answer y'all questions, because when you're making these videos, you tend to like skip over things or whatever, because you got a million things in your head and you just can't get to everything or whatever. But yeah, I want to go live with y'all, answer y'all questions, you know what I'm saying, so y'all can understand the power of investing. This is real. Helped me out so much, you know what I'm saying? So like, comment, subscribe, and that's it. I'll see y'all on episode 3.